Hey guys, welcome back to this YouTube channel. Guess what? It's already February. A whole month has gone by in 2024. And guess what? The market has completely changed since we last spoke. And of course, for those of you who stayed tuned and watched my video in the middle of Jan, you know exactly what I'm talking about. And we saw it coming even before you had to wait around to watch this report. But now in this report, we're going to confirm a lot of the things that we predicted mid-Jan using data. And so if you love data and if you want to know what's happening in the Calgary real estate market, make sure you stay tuned and subscribe to this channel because that's what this channel is all about. It's Iyer, your Calgary real estate agent. And whether you're buying, selling, or investing in Calgary, even if you're interested in pre-construction, there's a lot of that happening. So make sure you reach out. We design a plan specifically for you because even though I go through this market report, there's no one solution that fits all. There's different timings for everyone depending on what you're planning to do and what's best for you and your family. So make sure you reach out. My link's in the description. Let's have a call, get the hi hellos out of the way, and I look forward to meeting you. Now, let's get started. So first, we start off by taking a look at the summary by the Calgary Real Estate Board, what they have to say about what happened in Jan. Looking back, sales rose to 1650 units, a significant gain over last year's levels and long-term trends, a rise in new listings, totaling to 2137 units. However, these new listings rose for prices above 300,000, but even more above 700,000. So we're seeing a lot more new listings above the 700,000 mark. Some of them between 300,000 and 700,000. Even with 2150 units in inventory, levels are near the January record lows set in 2006 and are at nearly 49% below the long-term average for the month. So despite having a lot of new listings, the inventory is just not able to catch up. And as we saw in the data that was happening mid-Jan, if you watched my last video, it was obvious that a lot of buyers were entering the market. We started seeing everything sell above list price and more price increases than price drops on list price. And so obviously all of that is getting absorbed. And so therefore, at the end of the day, the inventory is still not enough. This month's gain in new listings has helped provide more options to potential purchasers. So that's good. We have more options, but guess what? You're also in bidding wars. You're also competing for those same properties because it's not just you who wants that property. There's a lot more people on the market now. Supporting sales growth. However, the growth in sales prevented any significant adjustments in supply, keeping conditions tight and supporting further price growth. So we've already started seeing the price growth for this year. Spring market's here, it's early, and we're just going to continue seeing price increases as the time goes by. So the longer you wait on the sidelines, the more you second guess yourself, the more you'll end up paying, or the more offers you lose out, the more you're going to pay for the next one. Because each house that sells basically sets that new benchmark and the next one sells more than that. Months of supply in Jan was 1.3 months. This is significantly lower than last month, falling over last month's and last year's levels. This is extremely low. We've seen a decrease over the last 3 months, and now we're at 1.3. You definitely do not want this getting close to 1. Looking at the total residential price, as you can see here, month over month, the overall benchmark price has gone up by 2,200. As far as detached goes, that's at 702,200. So we went up by 4,800, the largest in benchmark price increase for this month. So again, now a lot of people are going in for that detached property as opposed to last month. Semi-detached, however, saw a drop of $2,100 over last month. But year over year, we are still seeing 11% price gain. And when it comes to row houses, year over year, we are at 19.7% now at 426,400. $1,300 more than last month. And apartment, absolutely amazing. It is the most affordable part of the market and it still gets a lot of attention. A lot of first-time home buyers trying to get into Calgary are targeting this price range and this particular property type. So $324,000 is the new benchmark price for apartments. And I can't believe I'm saying this. Like, I couldn't believe when we broke past 300, but yeah, that's what you're looking at. And that's an 18.7% increase year over year, a $2,600 increase month over month. And as you can see here, the months of supply down to 1.3, down from 1.58. So we had a little over a month and a half of supply last month. And therefore, I was able to get a bunch of properties under list price. We didn't have too much competition. We was able to get properties off the market. But now at 1.3, bidding wars, multiple offers, backup offers, just waiting for you to lose your deal so that someone else can come and take it. That's what we're seeing now, and that's the new reality that's set in. So obviously, spring market is here. Moving on to the overall stats per property type. This is very good to get a clear picture of what's happening in each property type, the level of competition you're looking at, and how much inventory and supply is really there. So as you can see, the sales for detached is at 31% higher than last year, 18% higher for semi-detached, extremely high for row at 42%, and apartments sitting at 54%. So all the demand is up here in row and townhouses compared to last year, significant increase. And what do the new listings have to say for that? The detached is only up by 9%, which is okay considering the detached is not that high for the sales compared to townhouses and apartments. But look at semi-detached. We have a huge surge of supply in Jan at 49%. And we'll talk about this more in detail about what's the impact for February's data. So for row townhouses and apartments, we're only at 16 and 17% in terms of new listings. And that's no good when you're seeing that level of sales, but new listings are not being able to keep up to those numbers. And so the inventory is at minus 13%, minus 3%, minus 18, minus 12. So minus across the board, but extremely low inventory when it comes to row townhouses and apartments. And so that's why you're going to face extreme competition. And how does this reflect in months of supply? What's months of supply? The amount of inventory left on the market. That is, if nothing new were to come on the market and you were trying to buy based on the number of buyers, everything off the market, that's how quickly you would run out of properties. And so when we look at detached, you're at 1.35, not too bad. Semi-detached 1.67, even better. But here, look at townhouses. We're at 0.87. That is extremely, extremely low. You hit below 1 and you are in very, very strong seller's market. Apartment 1.4. Again, 1.4, 1.35. Not very good, but okay compared to the townhouses. So if you're looking for a townhouse, make sure you have the right strategies against the seller and you're able to not just try and win everything by price. There are a lot of other things that go into play. Reach out and let's figure out a plan to get you into your dream property. And also, just for comparison, where were we at last month? Just to understand how quickly things changed on us. When we looked at last month, we were at 1.71 for detached, 1.57 for semi-detached, 1.13 for row townhouses, and 1.69. So all of these were above 1 last month. And in a span of 30 days, so much has changed. And so if you really want to be on top of the market, because obviously this data that I'm showing you now is valid today, it's maybe valid tomorrow. But if you're planning to buy something in 15, 20 days from now, you need to know what's happening then. And so on this channel, I make videos about market updates mid-month. And so you make sure you stay tuned. And I will be putting out that data because I love data. And we'll understand how the market is quickly changing and which areas are the best to target depending on what you're looking for. Now to take a look at the summaries by property type. This is important to understand what Calgary Real Estate Board thinks is happening and where we are going to go from here. So when we look at detached, you can see the sales to new listings ratio is at 77%. The new listings rose for all home prices above 500,000. But the largest gains occurred in over 700,000 markets. In January, the unadjusted detached price reached 702,200, nearly 1% higher than last month and 13% higher than the prices reported last year. A low of 10% in the city center and southeast districts to all the way 27% gain in the east district of the city. And if you follow this channel, you know what I think about buying properties in the east. Of course, they saw the highest gains. A rising tide raises all boats. Not necessarily that east will fit you, and depending what you're looking for, you might want to look at a different area. Semi-detached sales to new listings ratio fell 59%, significantly improved over the 82% reported last year. So this is actually very interesting because semi-detached has been really struggling when it comes to bringing listings on the market. And therefore, the buyers have also weaned out for this part of the market because there's not really too much to pick from. So you either end up going to the detached route if you can afford it, or you end up going to row townhouses. Now, everyone would love to get into that middle range of semi-detached, but there's just not enough properties. Now, however, with the surge of properties that has come on market in Jan, I'm curious to see what happens in Feb. My prediction is this will lead to a suite of buyers who will follow into the segment now, since there are more properties to pick from, and we will see a property increase in semi-detached for Feb, leading away from detached, because a lot of people are being pushed into detached. They really don't want a townhouse, but the price ranges for detached are going up too fast, and a lot of people are getting priced out. I think we might see a compression happen on the market where a lot of buyers will get pushed back out of detached into the semi-detached property. 625,000 as the benchmark, slightly lower than last month. The only property type to see a drop in benchmark prices, but over 11% higher than last Jan. So overall, in a year's time, we are still up. Decline was mainly driven by adjustments in the higher price districts of West and City Center. So West and City Center are the ones that are suffering when it comes to semi-detached, and that's pulling the market down for semi-detached overall. In terms of row townhouses, sales to new listings ratios remain exceptionally high at 92%. That is very high. Anything above 85 is extremely competitive. 92 is just things are getting absorbed off the market in a matter of hours, if not days. Months of supply once again fell below 1 month. In Jan, the unadjusted benchmark price reached 426,400. The West and City Center districts saw an unadjusted benchmark price slightly over December. So apartments, what's happening? Rising to 488 sales in Jan, a year-over-year increase of 54%. We are selling 54% more properties in apartments than this same time last year. However, the gains in listings did little to supply levels. With 682 units, inventories were 40% lower to the long-term trends. So even though we have a lot of listings coming on, which then spurs this buyers trying to take off the properties off the market, even with that amount of demand, the supply is not able to keep up. And so compared to longer-term trends, the inventory is still suffering. Prices reached 324,000, nearly 1% higher than last Jan, 19% higher than last Jan. Prices rose across all districts, with the largest year-over-year gains occurring in the most affordable districts of Northeast and East. So Northeast and East still remain extremely affordable in terms of the overall city pricing, but it's not necessarily where you want to be, depending on the demographics that you're looking for, depending on the type of market, what you're looking for your kids, the types of schools. It's a very different market, and you really need to understand the different quadrants if you're moving into Calgary. If you're already in Calgary, you have a good understanding of where you want to be and you have a vision. And so you understand and you need to track the prices for that particular segment of the market. Now to look at property appreciation on benchmark price by region. This is extremely important, especially if you're already in Calgary, to understand how your property is doing against other areas in Calgary. So going over here, you can see the North saw an increase of 3,800. Northeast saw an increase of 3,900, whereas the East absolutely killed it with 9,800 increase in benchmark price month over month and a 25.6% increase year over year. Unbelievable. Southeast, on the other hand, only $900 month over month. There's a lot of data play into this. Some of it is just because the lack of properties that are actually coming to the market. People here don't really want to move, so you don't really have much buyers even trying to get in. Finally seeing a recovery though in Southeast. Can a boost in semi-detached listings in Southeast, which I have seen happen in Jan, potentially change this, maybe. In South, we saw a month over month increase of 1,700. The West finally seeing a comeback of $15,000 compared to last month, and this is after they had a drop of $20,000 in December. Northwest saw an increase of 1,900, and overall City Center is down 5,800. City Center has been relatively flat, up and down, really not significant price gains. Year over year, we're only looking at 5.1%. Now let's take a look at what were the two biggest winners and two biggest losers for each property type in different districts. When it came to detached, clearly city center and southeast didn't do too well. But when it came to west and east, detached seemed to have done very well at 3.79% as the highest. And when it comes to apartments, in terms of the biggest losers, you can see city center again and north. City center is no surprise. And when it comes to the apartments, biggest gains, northwest and east. Semi-detached, biggest losers are on city center and west. But as far as the biggest gains go, you're looking at northwest and east. So that's where significant gains, that's where competition is. And for the row townhouses, biggest losses in city center and also in the west. The biggest gains are in northwest and southeast. Southeast has started seeing more and more listings on townhouses come up. And so there are a lot of buyers clearly waiting on the sidelines, and then they got what they wanted, and so they're willing to pay, and so we are seeing the price increases. Now, when we look at the sales data for Jan, sales is at second highest it has ever been since 2010. 2002 was the craziest amount of demand we saw before the shock of the interest rates. So obviously that is still higher, but apart from that, we are at the highest since 2010. Now, what do you think is going to happen when we see interest rate drops? Will we hit those 2020 levels? Because all those buyers who have been waiting since 2020 and couldn't get 2022 and couldn't get in, they're going to come in on this market. And so I think we might at least hit those levels, if not surpass it. As far as total inventory goes, we are at all-time lows since 2010. So obviously not enough inventory. It's the same story for the last 1 year. And if we look at the months of supply, now this indicates where you're going to face the most competition for each property type. So for detached, we have the lowest amount of inventory in the east, and obviously you're seeing those price gains happen. When it comes to apartments, lowest in south, southeast, and west. Semi-detached, lowest in south and north. Row townhouses, lowest in the north, south, northwest, and last followed by northeast. So looking at the benchmark prices, this is my favorite graph. Y'all know it. Every video I pointed out, it's very important for buyers, very helpful. The way you use this is you just decide your budget first, which you really know, and then you decide a property type that you're ideally trying to get into, and then that will help you find what areas of the market you're actually targeting. So for a quick example, if you are looking at detached, but you're like, I cannot spend more than 500,000 or maybe 500 to 600,000, then looking at detached, between 500,000 and 600,000, you're looking at buying a property either in the east, or if you go slightly higher, then maybe northeast. There is a little bit more flexibility on that. This is just benchmark price, does not reflect average price, and does not reflect the different variations on housing. So unfinished basements, just 2 bedrooms or lesser bathrooms, you might be able to get something for lesser. So you can shoot slightly above and slightly below your budget, and then you might be able to get a nicer property in a different area, or a lesser property but in a better area. And that's how you would use this graph depending on what you're looking for. But it will also help you pick a property type. So say, for example, you're like, I don't like what detached is telling me. In semi-detached, where can I go? And then maybe you can get into the areas that you actually want to buy a house in. When it comes to the total inventory by price range, what are we looking at? So in Jan, as you can see, not too many changes when it came to the inventory. Inventory stayed pretty stable, pretty close. Small increases across the board. When you look at the total sales that happened by price range, as you can see, a significant increase above 700,000, between 700,000 and $1 million. We have a lot of buyers now coming into the market, even between 600 and 699. So that is pretty crazy. And that was not the picture last year. Last year, we were seeing more sales happen between that 400 to 600,000 mark, because that's your ideal bracket for a first-time home buyer based on qualification amounts. But now clearly you are having more luxury buyers trying to come into the market, take those better deals, and they might be getting really good lots before the prices go up even more crazy. So as I predicted, buyer comfort with interest rate changes to reflect buyers away from that mid-range into a higher range, and we're seeing that play out. And I predicted that in the December report, and a lot of that optimism coming into the market, people getting comfortable with the idea that their mortgage payments will drop over time, and they're utilizing the lower prices right now before the frenzy of buyers that will come in the spring market. As far as the City of Calgary total sales, this one we want to look at just to get an idea of where those sales sit as far as different property types go. So Jan sales continue to shift. We'll see from where the detached dominated in 2022, right? So you see this entire blue area, that's the detached properties in 2022. But now you're seeing a huge shift where detached properties are a lot lesser as far as the whole segment goes. And we are seeing a lot more on the apartment side, and this is no surprise, but this just calls that out. So clearly there's still a huge preference for the affordable part of the market. City of Calgary total inventory and sales. So inventory clearly didn't have a chance to pick back up, but sales rose sharply compared to December, leading to the increase in benchmark. So as you can see here, compared to December, we are pretty much at the same point when it comes to inventory. And sales, on the other hand, went up from December to Jan. So because inventory is not able to keep up, we are seeing more compression, and therefore we are seeing this price increase go up. So unless inventory is able to increase, which it should for spring, we should see a lot more inventory. But at that same time, the demand is also building back up. And if it's not able to keep up and we have tight points like this we had in May last year, that is going to be an extremely competitive market, extremely competitive market. And so depending on where you are, if you own a property in Calgary, you might potentially want to consider selling it now, especially if you're going to upsize, because there is more equity to be built in that larger property than the property you're sitting in. On the other hand, if you're going to downsize, you might want to wait around and then leverage the market to then get into those competitive offers. But again, it all depends where you're moving, right? Because if you're going to move into an area that is already seeing extremely high demand, it's going to see more demand in spring. And so you're going to have to still go into multiple offers. So it's about balancing how much equity can you really build through these next 6 months versus what you need to pay to get into where you want to be. And so that's it for this report, guys. I hope you found value in this. As you know, in 10 days, maybe 15 days, I will release a mid-month report, and that is something I work on myself. It's exclusive to this channel. I pull the data, I generate it, I study it. I create this kind of report myself mid-month, and that's usually exclusive for my clients, but I'm going to start making videos about it because I've seen how valuable it is. And I would love to know what exactly you guys want to know. What data isn't publicly available, let me know what questions you have, and I will try to answer it. I'm going to build these graphs out for you guys. If you're sitting on the sidelines, you're not sure what the right timing is, if any of this data is still confusing to you, if you own a property, if you're trying to invest, multiplexes are really hard to come by. A lot of them are happening mostly off market. Investors are mostly selling them off market. On market, at any given time, there's usually just anywhere between 2 or 3 multiplexes. And this is not accounting for the luxury multiplexes, of course, which run into multi-million dollars. At that point, the cash flow just doesn't make sense. So if you're still trying to cash flow, let me know. Let's try to figure out if there's a plan we can come up with for you. Overall, the Calgary market is shifting this year already from a cash flow market to an appreciation market. It's a very clear shift. We are seeing those numbers not make sense with the price drops, with the price increases, but interest rate drops. There might be some leverage to be had, especially if you're willing to put in some sweat equity. There's a lot of discussions, a lot of things I can go into. So make sure you reach out. I would love to have a chat and get you guys set up. And if I find anything even off market, you might be at an advantageous position because then you're not competing with everybody else. Thanks for staying till the end, and make sure you like, subscribe. I'll make this report available in the link in the description. If you need anything else, again, drop a comment and tell me, what do you think is going to happen in Calgary real estate market 2024?